Good day, traders. This is Roger Scott from Market Geeks with another video tutorial for you today. Before I begin, I'd like to remind you to subscribe to our video channel. And don't forget to visit MarketGeeks.com to download your free swing trading report today. Today I want to discuss a few of my favorite stock analysis tools. Keep in mind, the best tools for trending markets are probably the worst tools for choppy markets. And the best tool for choppy markets are probably the worst tools for trending markets. So before you decide to use these stock analysis tools, make sure you first figure out if the market is trending or range-bound. Relative strength is not an indicator, but a comparison between two stocks that are in the same industry groups. When one stock is trending strongly, you compare the trend to the other stock in the same industry group and see how strong their trend compares to the other stock in the same industry group. Typically, you will find one particular stock that outperforms all other stocks in the industry and leads the sector. The relative strength comparison works especially well with ETFs because they represent a wider range of stocks than one individual company. You can see in this particular example how the spider outperforms the QQQ. This would suggest that the current rally is broad-based and not focused or centered on the technology sector. The spider is up over 27%, while the QQQ is up only 19%. Back in the 90s when I started trading, there was no internet available. I had to go to the newsstand every night to get the next day's Investor's Business Daily newspaper, which would divide stocks into sectors and provide a weekly highlight of each sector. I used to cut out the sections so I would know which stocks were in each sector. Times have changed and there are hundreds of places where you can get sector breakdowns. I would suggest barcharts.com, Yahoo Financials, or investors.com, which is how Business Daily now goes by. The more specific you can break down the sectors and the stocks or ETFs that make up the sectors, the easier it will be to choose stocks or ETFs that have the highest correlation to other stocks or ETFs. You want to find markets that are closely related so that you can see which one is stronger or weaker. Relative strength works best when markets are trending similarly to how the stock market is behaving at this time. I highly recommend you begin analyzing strength and weakness with simple relative strength visual analysis. Another very important tool that many stock traders ignore is the 52-week high-low number. This figure is a simple measure of stocks that are making one-year price highs and lows. This analysis tool doesn't promise much and doesn't look as cool as some advanced indicators. However, I can assure you more professional traders analyze the 52-week high-low number than any other technical indicator. When markets are range-bound and lack any significant trend, the 52-week high-low number won't be of much use. You will typically see a handful of stocks making highs and lows each day. However, when markets begin trending, the numbers begin shifting very quickly one way or another. Once the trend begins, the ratio will show a strong bias in one direction, and as the trend continues, the ratio will get stronger and stronger. By monitoring this indicator on a daily basis, you will start developing a feel for the momentum that's moving the market, and will start noticing patterns when trends are beginning or coming to an end. Today's numbers show 451 U.S. stocks are making 52-week price highs, and only about 15 stocks are making 52-week price lows. Another way I use the one-year high and low number is to analyze individual sectors to see how many stocks in that sector are making one-year highs or lows. If there's a specific sector that's trending strongly, I will typically see how many stocks are breaking out of the 52-week price high and 52-week price low. This will help me determine the type of potential the stock has. Some of the best analysis tools are not actual indicators that are derived from mathematical formulas. Using actual price to help determine market price is like looking at market without any filters. Most technical indicators are filters that distort what happens to actual price to some degree. Using relative strength to determine sector strength and individual stock strength can provide valuable clues to future performance. Similarly, 52-week high-low ratio is one of the best ways to analyze cumulative market strength and weakness, as well as individual sectors and stocks. I promise if you monitor this indicator on a daily basis for a few months, you will start developing a natural feel for the stock market's ups as well as downs. Thanks for joining us for today's tutorial. Don't forget to visit MarketGeeks.com for your free swing trading report. Wishing you the best in your trading.